Good morning, MegaWhale team, and welcome back to the channel. I hope you're all having a fantastic day today. In today's video, we are going to be discussing the short-term fluctuations in Bitcoin's price action, discussing yet again a potential rejection from 115. We'll also be taking a look at the macro trends, key dates you should be paying attention to, historical levels of significance, support and resistance, and of course the total cryptocurrency and total altcoin market. Will Bitcoin finally break through 115, facilitating a likely continuation up into new highs, or are we still positioned for a correction? We'll be discussing all of this in the video today. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. And if you are interested, you can also join us on Telegram. We post nothing but the facts, the data, the technical and the structural information. No hype, no BS, no emotion, just pure raw TA. That link to the free Telegram channel can be found in the description down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And of course, if you were interested in joining our VIP community, you can do that by clicking the pinned comment of the free channel, contact our admin, or check out a video showing you inside the channel, or even a 54+ month trading track record. Check it out, and let's jump into the content. So as we can see here, guys, Bitcoin has been sitting underneath 115,000 now for coming on a full week. And during that week, we have seen numerous retests of that 115 to $115.6 thousand level of resistance, with just another retest occurring over the past 12 hours. So far, we are seeing a short-term rejection from 115, as depicted by the short-term candles, moving back down to the high range at 114. Of course, with this 115 level still holding as a critical point of resistance, the possibility for corrections are still on the table. The 115 level is really the key level we need to break through to increase the probabilities for directional continuations higher. That is when the favor really starts to shift back into the hands of the buyers. Until then, although diminishing, the probabilities are still likely for corrections, and that only increases as we start to break below 112 and our macro uptrend. So the hope is not lost for the bulls. There is still a lot of hope on the table here, and of course, while we are sitting between 115 and 112, we are more in a neutral chop zone. We're discussing all of this in the video today, of course. Starting on our market data, 24-hour volume is dropping quite a bit. Midweek volume actually relatively low, only 226 billion, down 20%, with liquidations down a pretty big 50% at 172 million. Most of these liquidations coming from shorts, but not by a large margin, pretty evenly cut down the middle here, with around 71 from longs and 100 from shorts. The DXY is dropping toward the downside, but still above that short-term weekly uptrend we have developed, watching that short-term weekly uptrend over the next couple of days. Of course, 100,000 is that key horizontal resistance, that change of character level where we need to break through if we do want to see the DXY continue up. Until then, the downtrend is intact for continuations to 92 and 93 on the macro. The S&P 500 did see a pretty shocking performance last week, with a market-wide pullback into a high time frame support at 6,200. We have since seen a nice solid bounce from that level, and we are currently showing demand above that daily high here at 6,337. So all in all, it is looking pretty solid. We do want to see the price sustain above these lows and the 50 MA for continuations up on the macro. We are still looking for 6,500, etc. If we do lose this current level of support, that is going to be the trigger for further continuations to the 200 moving average. But provided we remain above 6,250 to 6,220, we are expecting continuations upwards. So essentially, bullish above this support, bearish below, keeping it nice and simple. And that is really it for the broader markets. We've got through that nice and quickly. not really that much is changing over here. We are just seeing some short-term volatility across the markets. We'll be taking a look at Bitcoin like we mentioned today, as we do have some rejection developing here. We'll also be taking a look at our macro trends, such as this multi-month uptrend spanning back from April. And of course, we'll be taking a look at the total market cap and the altcoin market. Now, before we get into all of that, if you do want to support me making this content and you just like the kind of content we make, you can go ahead and sign up to BitGet, Bitunix, and BingX with the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45%. You'll go to support me making the content, and of course, you'll support yourself in your trading journey. We'll play an ad and we'll jump right back into the crux of our analysis. If you are looking for a new exchange or just want to support the channel, sign up to Bitunix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to Bitunix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on Bitunix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's get right back into it, taking a look at the altcoin market and the total cryptocurrency market cap. So the altcoin market, to start off with, over here on the weekly chart on the right hand side, the altcoin market has been able to sustain above that key level of support at 940 billion. As we know already, for the altcoin market to enter that next parabolic leg up, that strong move where we see significant rotations for altcoins, we need to see that $1.06 trillion level, this level right up here depicted by the upper level of this horizontal box. We need to see that breakthrough. If we can see a break and sustain on the weekly above that level, that will facilitate a likely continuation well above those prior November 2024 highs with the altcoin market. That is the weekly chart. Moving to the daily chart, we do still have some key levels we need to break through. For some momentum to come back to the altcoin market, we need to see that $1 trillion level of psychological resistance reclaim as a point of support. Meaning what we saw here was we saw this expansionary move upwards, we saw a breakout of 1.06, we did not sustain, creating a higher low, retesting that 1.6 resistance, and only then seeing the break of 1 trillion again, resulting in a downtrend. So what was once prior support becomes future resistance. So that $1 trillion level, which was prior support, is now a future trigger point for the shifting probabilities for continuations back upwards. So until we break through 1 trillion, the altcoin market is likely to remain quite speculative and quite sketchy. If we break above 1 trillion, it is likely we'll start to see a lot of strength rotate back to the altcoin market. And of course, if we break through 1.06 trillion, we then see strong rotations of the altcoin market. So that takes us down to the smaller time frame. On the smaller time frame, we can see here the 4-hour chart. We are still very clearly in a downtrend. We are currently retesting that 50 EMA again, creating lower highs as we are developing. So at the moment, I'm not expecting anything too amazing from the altcoin market. We might see a few coins perform well. There are definitely some coins creating some very strong horizontal supports, but until we start to see the altcoin market as a whole climb back upwards, which will be mostly facilitated by, of course, the total cryptocurrency market continuing upwards, and of course we know that is facilitated by Bitcoin clearing through that 115 resistance, it is unlikely the altcoin market is going to see anything too miraculous occur. So if we want to see the altcoin market have that next significant leg up, we need to break through $1 trillion. That is the level we were watching. For the total cryptocurrency market, we are looking slightly better here, but we are watching this upcoming weekly candle close. This is occurring in just under 4 days now. We're looking at that $3.73 trillion level as a level to close the weekly above. Now, if Bitcoin is able to close above 115.6, which is the upper level of resistance on the horizontal scale, it is likely we will see direct continuations upward for Bitcoin, which we'll discuss later in today's video. But of course, we will also also see the 3.73 trillion, which is the prior weekly range high, close above on the weekly chart, which will do one thing. That would confirm we retested that 3.6 trillion, the weekly close level, as a point of support, with the momentum remaining positive, which could facilitate a market-wide continuation. So that kind of is used as confluence when we look at Bitcoin to validate that, well, if we do break through 115 trillion here, 115.6, and we are able to push upwards, it is likely Bitcoin does rally, and that is likely to drag the rest of the market, with the altcoin market to 1 trillion and the total cryptocurrency market cap back upwards. But until that happens, we are still in that danger zone where if we do not get that weekly close above, we could see in next week that momentum continue to trickle down, and we may see a negative momentum shift occur in the next 14 days, which will facilitate continuations back to the break of structure as Bitcoin drops back to 112. So, as you can tell, it doesn't appear like Bitcoin is in a particularly very important position, but it absolutely is in an important position, because where Bitcoin goes here is going to determine how that total cryptocurrency market reacts, whether or not it comes back into these high time frame supports and potentially has weekly momentum shifts we have not seen since all the way back in April. The last time we had a weekly momentum shift, a positive momentum shift, was back over here in April, which basically marked the bottom. It was a weekly momentum shift occurred on this candle here, which facilitated then from that point onwards a near 60% rally in the total cryptocurrency market cap, and of course Bitcoin rallying around 30% in that move upwards. So a very important level for the market, and as we can see depicted on the daily chart, we can see Bitcoin is currently sitting just above, we dragged this trend perfectly, just above this higher time frame diagonal uptrend. So let's talk about Bitcoin now. When we're looking at Bitcoin, Bitcoin is technically still in a uptrend. And that is because we are sitting above this diagonal uptrending level of support. This is representing the trajectory of the price action through the period from April up until now, which is August. So it was a 4.5 to 5 month period where we just had this aggressive uptrend for Bitcoin, again depicted by the total cryptocurrency market cap by this diagonal uptrend as well. However, what we have seen for the first time on the weekly is a negative momentum shift occur. And this is a warning sign for us. This isn't an indication that the market is going to 100% see a correction below this level, but it's a warning sign that that move becomes a possibility. When we're looking at the weekly chart, we have seen some very important patterns play out over the course of the last 2 years. Now, if we look at when the bull market began, the bull market began above 30,000. We look at this horizontal level of resistance, we can see what was once bull market support, which is here, becomes future resistance, which is here. Breaking through that point, we saw, again, the discussion of interest rate reductions. We saw ETF approvals begin. That is where we really start to see ETF approvals begin. And that is what kicked off the bull run in 2023. We've been in a bull run ever since. Anyone who says we haven't been in a bull run is absolutely delusional. The price is up from 32,000 in 2 years to 114,000. If you've gone at the bottom, it's up from 16,000, which is nearly a 10x over here in Bitcoin's price, or 8x if we look at it, maybe 7x if we look at it like that. But nevertheless, the bull run started at around 32,000. The pattern we have seen since then is one of, I guess, one that has been repeating almost religiously through the bull run, which is we have had periods of consolidation. The consolidations have been different structures. We've had horizontal consolidations, we've had wedges, we've had channels. But what we've noticed through those consolidations is a few things. Number one, the bottom of the consolidation prior to the breakout of the downtrend RSI has always been a retest of the 50 EMA and the Gaussian channel. Instance 1 here, okay? Instance 2 over here. And if we take a look at the weekly downtrends on the RSIs during the consolidation phases, we can see that the momentum shifts have triggered directional continuations upward and downward for Bitcoin. So taking a look at the upward continuations, a weekly momentum shift here facilitated that macro continuation upwards. A weekly momentum shift here facilitated that macro continuation upwards. The weekly momentum shift here facilitated that macro continuation upwards. And exactly the same can be said for macro continuations downwards or just overall corrections toward the downside. Anytime we have had a strong uptrend develop on the weekly RSI and we have broken down from that respective trend, we have as well seen corrections. The weekly breakdown here resulting in a multi-month correction to the 50 EMA. The weekly breakdown here resulting in a multi-month correction to the 50 EMA. The weekly breakdown here, which runs the risk of a multi-month correction as low as the 50 EMA, which could take us to the 100 to 96k level. And of course, as we know already, if we retest the Gaussian channel on upper band and the 50 EMA, a weekly close below that level triggers the bear market to start. So although Bitcoin is still in an uptrend represented by this diagonal trend line, and although the potential is still there for continuations higher, the warning sign is there that we need to pay attention to. And I used a good analogy in my prior video. When you're in a car and you're going around or you're getting close to a corner, a warning sign might pop up and it says slow down to 40 because it's a sharp turn ahead, okay? Just because you see the warning sign, it doesn't mean you're going to fall off the cliff, okay? It is just telling you that it is a potential and you need to be aware of it. So I like to look at this in exactly the same way. I'm not looking at it as saying, okay, I'm going to fall off a cliff. What I'm looking at it as saying, okay, there's a potential for a very interesting moment in time coming up where if we do break down, we could see that pullback, and it's just making us aware of it. But the trend is your friend until it ends. So we are in an uptrend, the trend is still directing upwards, so we need to be aware that the potential for continuations upwards are still very much there. So what would trigger the breakdown? What would confirm we are going lower? Well, when we look at this warning sign, we have got the weekly momentum shift. We are watching for a break of this trend line now. The break of this downtrend or this uptrend will trigger likely corrections as low as 96,000. If we take a look at the prior trend, we had an uptrend over here. A downtrend over here. We broke the downtrend. We went into an uptrend. That same uptrend is now being developed. We break the uptrend. We go into a downtrend. So it is quite simple when we are looking in that perspective. It becomes complicated now when we look at the short term because the short term becomes quite choppy. Anytime we are apexing between two very important levels, we see a lot of volatility in price action. We see very few clear patterns and structures develop, and it's very tricky to gauge the expectations on the short term for the price action. So this is a very tricky time to be trading, but of course, if you're trading based on horizontal levels, you can trust these levels and react based on what these levels are doing. So when we're looking at Bitcoin over here, we are going to be saying, we've said this already, if we break through 115, we are going to be entering this low historical resistance range, which takes us to the POC. If we look at the downtrend over here, the POC is sitting above that downtrend. So again, breaking 115 significantly shifts the probabilities in continuations back to 120 as the breakout of this downtrend here facilitates to move to 120. And we know already doing so will likely push us into a new all-time high. If we look at the diagonal uptrend, which is this daily uptrend, we already know the consequences of the loss of that uptrend. It is steeper correction. So we're coming into, this triangular apex here, which is apexing around the 14th of August, around 7 days from now, where what happens here in the short term has dramatic consequences on where the price is likely to go to in the higher time frame. So with that, the price action becomes a little trickier to read as it becomes more reactionary and emotional to all these short-term fluctuations. So what is the point of this video, I guess? The point of this video is to tell you, number one, the total cryptocurrency market cap and altcoin market cap are looking okay. They're hanging in there. They haven't broken down from any critical levels. They are holding above very important levels of support, and they have the potential to continue higher. The same goes for Bitcoin. Although there are massive warning signs, which if broken will trigger large corrections that we need to be very much aware of, and those are real possibilities, we are still holding above what is the most important trend, which is essentially holding this uptrend together, which is represented by that weekly diagonal trend line. The real problem is when those warning signs become reality, is when we start breaking down these trends, we see those steeper corrections start to play out. Until then, we do have a horizontal consolidation forming. And of course, for us to enter the range high again, we need to break through this level, which was once level of support. It is now a level of resistance. So let's zoom into a smaller time frame now and discuss. This is the short term here, guys. On the hourly, we can see multiple rejections from 115. So we know clearly this is a clear level of resistance. Again, resistance is resistance until it is not. We do have an uptrend here on the RSI. If we go down to something like 30 minutes, we can see already that uptrend has actually been broken toward the downside. So we are seeing initial signs of momentum shifting downward. We can have already these negative momentum shifts occur, and we can see weakening positive momentum. So we know already that the sellers are stepping in here. We can see the sellers are stepping in here, and they are trying their best to push the price down. The buyers at the moment with these longer wicks toward the upside and overall lack of downward reaction are clearly stepping in to try absorb that selling pressure. So a bit of a battle here in the short term between the buyers and sellers. The buyers succeed, we break through, we continue aggressively upwards. Until then, resistance is resistance. The potential for pullbacks are very much on the cards. Thank you for tuning in, guys. I wish there was more to say, but of course, as we do approach this apex, it is going to become much more of a wait and see game rather than what it was back over here when it was much more about predicting and reacting initially to these directional moves. Now it is about waiting and seeing to how the price responds and then simply jumping on the train, which with the direction of which it is moving. So thanks for tuning in. I'll catch you guys in the next video tomorrow. Have a great day. Bye.